All right, this is going to be a weekly recap from the 27th of June to the first day of July. And I had a total of 7 trades, which is not very much. That's a little bit less than average. And of these 7 trades, one trade right here wasn't like a full-sized position trade. I just traded a $17 position because I just wanted to practice to set up and trade it, but not necessarily put in a proper amount of shares, which I think in this case would have been another zero, and that would have been actually pretty profitable. It would have helped out here, and I did pretty well for what it was. I did have 57% winning percentage, which isn't the best, but there wasn't that many trades to base this data off of. 66% of my trades were according to my dollar risk level, and I will have to go from a 20 to a $30 risk level, which is going to be nice, but it might be a little scary this following week. And there was a time when I decided to go from a 20 to a $25 risk level, but then when I would calculate size and everything, I would always end up trading a $20 risk level position size. It's kind of weird to precisely calculate how many shares should I need for a $25 risk level. So I think 20 to 30 will be more legitimate, and it's not going to be as scary as from when I went from 10 to 15, because that was, like a half in terms of how much larger considering the percentage amount. But yeah, that's going to be the case, and hopefully things can continue forward. I had really good average dollar gains compared to my average dollar loss, which was mainly these two listed stock setups that did not work. My average percent gain is 8%, which is massive compared to what I've done previously. My average percent loss was just under 4%, which is actually higher than usual too. Was probably because of this one trade right here. And my average position size was twice my average losing position size, which makes sense because I have a very small $5 risk level with listed stock setups. I made $20.85, and that was with only $500 of dollar volume trading, which is really good because that means it's almost 4% of what I traded in terms of dollar volume was what I got back, so that's pretty ideal. Let's go ahead and look at the setups one by one, starting with LCLP on the 27th, and this is going to be a morning panic bounce play with a gap down and a higher low. Let's look at LC. Actually, I knew it. There was another trade. Let's look at LCLP. Still the same day, but this is a morning panic bounce play gap down. All right, let's get to LCLP. Not a very significant daily chart, but I liked it because it did break this ultimate support level that it was trying to hold right here, and it had that gap down. Let's go back and look at the 27th. Oh, which is going to be right here. The chart looks kind of weird. All right, here's the move. I was in at 933 at sub penny 16. So that was right here at sub penny 16 at 933. I was in it right here, and it was a little nerve-wracking because I think there was a possibility where you could have downtrended more because it didn't like officially break a trend line that I had, but I did get in because I saw like a potential level 2 reversal, and this one did work out. It did get above VWAP, but the volume wasn't really that nice right here. I did get out 2 minutes later at 17.93, so almost 18 at 9.35, which means I got out right here, right around this 18 level, and I don't know if I sold in 2 pieces or not, but okay, yeah, it seems like it was just maybe 1 piece. No, I did sell in 2 pieces right here. Okay, that was the first trade right there. It did get as high as sub penny 20, but that would have been very hard to sell into. There was a point where it looks like right here, 19 was at the bid, but yeah, it wasn't bad for what it was. It just doesn't have that much volume. And then I did take another trade. Same stock, same day, same setup overall, but now I'm trading a higher low. So in theory, this is a morning panic bounce play. It gets to VWAP and then it downtrends. And now ideally this level is going to hold and it's going to be a higher low off of the panic bottom. I did get in at 942 at sub penny 17. So 942 was right here, and I got in at sub penny 17. So right here is when I got in. And this one, I mean, it got to VWAP, but it didn't get much higher. Let's see when I sold. I sold at 954 at sub penny 17 and a half. So let's look at 954, which was right here when I ultimately got out. And yeah, that was the case with that one. It just probably looked a bit boring, but there could have been potential. It could have broken past VWAP and maybe, you know, been a nice sell into the 19s, or best case scenario, it breaks this 20 sub penny level. But that was a good attempt, and I just felt probably uneasy with how little size there was, like in terms of volume. There wasn't much volume trading, so I didn't trade my complete $20 risk level position. I just traded a very tiny amount, and it would have worked out. It would have been a profitable trade, although that's probably something I can't trade if I do trade a much larger position size. Let's look at GEGI for the 27th, and this is going to be a multi-day intraday support hold reversal setup. That's a pretty long name. Let's look at GEGI for the 27th. 27th is going to be right around here. So I guess the idea was is that it had this uptrend and now it's downtrending, and then maybe it's trying to hold off of this 20, give or take 26 sub penny level, and maybe you can try to support this level and then try to reverse. Let's take a look at the 27th, and I guess we'll just highlight maybe from the very middle. I was in at 10:01 a.m. at sub penny 28, so 10:01 was right here, and I got in at 28. I probably saw how I had a downtrend. It got to this level right here around 27, and now it looks like maybe at the time I thought it was going to turn around or something like that, but it was also in theory trying to hold off on this level right here, and I just thought that maybe it could be something that could turn around eventually and be a profitable setup. I did get out at 10:08, and it looks like I barely lost because I saw that 275, which is just under my entry. Let's look at 10:08, which was right here. I probably just sold the other piece when I just got tired of holding on to the setup and it wasn't doing anything. Although I guess a little bit later it did get to 29, but it definitely didn't do anything that would have been ideal, where it could have actually have continued to hold and maybe start to reverse and head to the 30s or something like that. This setup did not work out, but I think it was a good attempt for what it was, and it also didn't have that much volume. Let's look at the 28th with CMGR. This is going to be a dip and rip. First day on the second run. So let's look at CMGR for the 28th. 28th is going to be right here, 28th. So I guess I'll actually zoom in a bit more. The idea was is that this had its first run up right here and downtrended, and now this is going to ideally be the second run up on its first day. So let's go ahead and go to the 28th, which is right here. It clearly moved a lot. I was in at 934 at sub penny level 68. So I'll actually just zoom in a bit more. 934 was right here when I got in. This green candle, and I got in at sub penny 68. And why did I get in it? So in theory, that setup where it can try to, you know, be the first green day, second run up, it has to move towards the highs right here in the very morning, and then it just sells off for a few minutes right at the market open. And then once it looks like it's trying to hold this level in reverse, especially when it breaks VWAP right here around the 67, give or take level, that's when I got in at 68. And this one did end up making a move as high as 85. So that was pretty impressive. I did get out at 937 and my average was 77 and a half. So 937 was right here, and I got out at 77 and a half was my average. I probably sold in two pieces, and I guess I can try to zoom in a bit more. Again, I was in right here at 68 when I saw that dip and rip setup, and yeah, it did get much higher. So let's take a look at my notes and see if I could have done anything better. No, nothing really nothing really bad. Maybe I could have tried the hole better, but that's hindsight. That's like saying, oh yeah, just because you see the setup worked, now you're saying you should have held on to it better. There isn't anything here that seems like I could have maybe have done better other than perhaps maybe a trend line. So maybe from here to here. And then when I extend that to the right and I go back to here, right, maybe it could have been something where I could have sold once it broke the trend line officially. And then that would have been something where, I could have sold the other half for a higher price. But I think I did this one for what it was, a pretty good attempt. And it did eventually break the day high and do something a lot nicer later. So that was pretty impressive. I forgot how I had this thing. I totally forgot. I think I had it like this. Anyway, this was a pretty nice move later. I didn't trade this, but this would have been a nice thing to be a part of. And it did uptrend a lot more from where I first bought right there. But I think that was a good setup for what it was. Let's look at the next trade, which is EVFM. And these were the two listed stocks that just did not work out at all. And when I had these two trades, I figured, all right, there's nothing in the OTC markets that I really like. I had these two listed stock trades which went horribly. I'm going to just call it off. And that was a pretty good idea. And that also resulted as to why I didn't trade, I think, on Friday. Yeah, I didn't trade anything because it just didn't seem like there was anything going on with the OTC market. And I didn't want to do the same mistake I did right here, which is trading listed stock setups that I have less experience with. I feel much better trading OTCs. Let's look at EVFM. This is a weak inverse head and shoulder setup for the 29th. Let's look at EVFM on the 29th. Again, this is like seeing no setups with the OTCs, and then I decided to try to trade some listed stock setups. So 29th is going to be right here. I'm going to zoom in a bit more. And I was in at 955 at 8618. So right here, I'm going to zoom in even more. That looks a lot better. 955 at 8618. So I got in right here. Why did I get in? I thought this was going to be an inverse head and shoulders. Shoulder, head. And then when it was right here, I thought, it looks like it's trying to hold 86. Maybe this can be the shoulder. And then ideally it makes a move towards the neckline or maybe VWAP or even above it. And as you can see, it did not work out. I sold the same minute actually at 84.56. So at 9:55 I got out at 84.56. So I got out right around here near the bottom. Again, I was in it thinking this level was going to hold, and then it broke under, and then it looks like it was going to break my risk level, I think, or maybe I got a bit confused on it, and I just cut it right there. I did downtrend some more, but this thing did ultimately make an inverse head and shoulder. Shoulder, head, shoulder. I hesitated on this one, but this one actually worked out. It made a move from the 83s to as high as 90, which would have been nice. And then I was watching it for like a second higher low, which it didn't do. And then once it got to this level, this thing was lower than this level, so that wasn't ideal. Although I guess now looking at it, it could be an inverse head and shoulders here, a shoulder head, and then a shoulder. And that made a move from an 81 to the 88s. And if you want to count this up to 94. So yeah, that was pretty much it with that. Just me trying listed stock setups while there was nothing with the OTCs. Let's look at the next one, which is ALNA. And this is a trend line follow, higher low resistance breakout. Let's look at ALNA for the 29th. I really didn't like ALNA. EVFM wasn't that bad, but this one was like really ugly. Yeah, let's just look at that ugly candle right there. 29th is going to be right here. Had a nice move, but then you can see it sold off pretty impressively too. I guess congrats to any short sellers. I was in at 1101 at 40 and a half. So 1101. I'm going to zoom in a bit more again. 1101 was when I got in right here at 40 and a half. Yeah, I got in right here. This one just really got me good, and that's what made me stop trading that day and then not want to trade listed stocks when there were no setups on Friday. Let's go ahead and draw a trend line since that was part of the setup. I believe I drew a trend line something like this. Or maybe it was more aggressive. No, actually it wasn't right here. I think I drew my trend line based off of this price action right here. That could be it. Let me see if I actually still have it saved. Okay, yeah, you can see this is my trade right here that I used to keep track of my notes. It was off of these two levels right there. I was in at 1101, again at 40 and a half. So again, the idea was is that this thing was following this trend line at the time, and then it was a higher low setup in that this was the bottom, higher low, following this trend line, and then we break this important level, this resistance level of this sub penny, not sub penny, regular 40 cent level. And I thought, you know, if it breaks this, it can maybe try to be a short squeeze and then get to the 42s ideally, and then maybe even try the day high at 44. Then this thing could be really massive, especially around the time period 11 a.m. because that's very common for a lot of stocks to break the day high and make a pretty impressive move recently. So when I got in, it broke past this 40 cent level, and I was, you know, thinking it was going to continue, but it wasn't. It was just a fake out, a little wick right here that got me pretty good. And then I did get out at the other part of another wick, 1103 at 36.61. So right here, 36.61. I got out, yeah, at a pretty bad price right here. Let me just make sure. 37.61. Okay. Yeah, 37.61. I mean, that really sucked. Right around here. Wait a minute. I think I'm looking at the wrong spot. Right here at 1103. Okay, yeah, no wonder. I was like, I can't find the price, but I guess it was there. But I remembered selling on a wick. Yeah, I sold right here on this wick. And this is the one that really annoyed me. Again, I was in right here at this 40 and a half level, and then I got out right here at the 37.61, which was near the bottom of this wick. I just got absolutely owned. It broke the trend line, it didn't work out, and it got me right here at the very top. So once I had that trade, I was like, I don't want to trade listed stocks anymore. I'm at the point of the week where I don't really remember the trades until I start to go over it. I was like, I remember it being on the wick. This doesn't look like I got out you know, on the wick. It was in the middle. No, it was actually this candle where I sold. Let's look at the last trade, which is TXTM. Multi-day resistance breakout, intraday VWAP breakout. I can't wait to explain that one. TXTM on the 30th. Right around here is the 30th. And just like a continued reversal, the 30th is right here. And I believe this trade was in the morning. So let me just highlight it from there and try to do it right from the beginning. So the idea is that it had this level right here. It kind of downtrended, but then it was holding this 1 cent level. As you can tell, it never really got to 1 cent, never broke under it. And this thing is slowly uptrending, and it is trying to hold that 1 cent level. So when I saw right in the morning, it had a sell off, and then it was trading back and forth, and it held 1 penny. It was looking good, and then it was trying to consolidate, and then it was not dropping as much as it was previously. It was starting to get a little more compact, almost like for an explosion. And then once we were starting to break past VWAP, this is when the bulls are in the, you know, advantage because it's above VWAP. And I got in right around right there. I think I got in at 953 at 10.735. So 953 right here at this 10.7 level is when I got in. Right when it looks like, again, it was keeping its distance from 1 penny. It's overall uptrending and holding this level, and then it's breaking past VWAP, and I got in at this 107 level. And I did get out, not my best sell, 954 the very next minute at 11.1, which is right here at 954. I got out at 11.1. And the thing that threw me off is that, you know, I really wanted to be a part of this setup and everything, but when I got in right here, immediately there was this volume, as you can tell, a whole bunch of buying price action was happening, and the ask was lifting up, but the bid was not really moving. So it kind of threw me off. It made me feel like this was not going to be sustainable, and it was just going to be a bunch of buying, and then it heads back down. I did sell right here again at 11.1, but what I could have done better is that I could have sold half of my position and set at 11.1, and then it would have been fine if maybe I sold the other half at maybe 11.5 because I'm worried that it's not going to break past the day high, and then my average would be at 11.3, which doesn't seem like much, but is actually a lot more in terms of percent difference, right? It went from 3 to 5%. I would have made more too. And that was the idea with that. And it did get higher. It got as high as 11.18. And then the nice thing was is that it did come back down and it held above this VWAP level. And it's the same setup where it was not just holding VWAP, but it was now starting to lift off of VWAP. And that was a pretty impressive move when you can see a break. You can even go up to here, the day high at 11.5. And then it got as high as 13, which is very massive. That's a huge percent difference. Just to show you, right? That's a 20% move. So ideally, I could trade better. There were a lot of things that I did well here. There were a lot of things I could have done better, like right here selling in two pieces. I need to keep getting better in that sense. And because I'm trading better overall, I am going to go to a $30 risk level, which means that anything under 25, I'm now going to consider as a trade that I didn't follow my $20 risk level. And yeah, that's pretty much about it. I'm just going to call it off right here. Definitely a lot of things I can do better, but I'm very happy that I had a very nice percent difference in terms of what I made in comparison to the dollar volume that I traded. And I'm also happy that, you know, I had this day right here when I traded those listed stock setups and they were totally not working out. And then on Friday, I didn't do anything dumb and try to trade like 50 setups or something like that on a listed stock and get burnt out. That's going to be all I have for this weekly recap right here.